Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, we've started the week on a strong note. Triple-digit gain coming in on the index today,
Yes.
very close to that 24,500 mark. We did, surpass that level in today, but cooled off slightly. Nonetheless, it's a 0.5% gain on the index. And mind you, we are coming off a 3-week winning streak.
Correct.
And bulls were a little tired, seemed a little tired on Friday, but we've seen bulls resume the rally with gusto. 24,460 is where we shut shop at, and even Sensex almost a 300-point uptick. 80,796 is where it's at. The mid-cap end of the markets that was underperforming on Friday has resumed its outperformance. The mid-cap index almost 2% gain, Yatin.
Yes.
For the mid-cap index. Small cap index as well gaining somewhere around 1% or thereabouts. Looking at the global cues, Yatin, we saw S&P 500 recoup all of the tariff announcement losses. So even global markets are playing catch up with our markets. Mind you, we are already up 11% from April lows, and now it's the turn of global markets to play catch up, which is also playing out. So although there are strong cues coming in from Wall Street on Friday, we had a very strong close. US futures are trending downwards, but a lot of tariff related headlines are also coming out, wherein Trump is saying that he would be looking at lower China tariffs at some point. So yes, on the trade front things are easing, and which is why we are saying we are seeing a catch up rally across global markets as well. But in terms of sectors, then autos were extremely buoyant today. Metals were also doing well. Oil and gas index that was driven by strong gains from Reliance last week continues its outperformance as well. But what didn't do well was the banking pack. Of course, numbers came out over the weekend from Kotak Mahindra Bank, disappointing set of numbers, and of course we can see the stock price here. The Kotak shares are down 5%, dragging down the Nifty Bank index. Even SBI, Yatin, came out with numbers. Although numbers were okay, but some commentary in terms of margins and loan growth, guidance in terms of loan growth as well, kind of disappointed street. But aside of that, if you look at some of the individual gainers on the index, Adani twins were doing well, top gainers, 6-7% kind of gains on both Adani Enterprises and Adani Ports. Trent, 4.5% gains there. Shriram Finance, the stock had gotten beaten down after its numbers, seen some bit of recovery today, 4% gain on Shriram Finance. Bajaj Finserv, M&M after strong set of numbers, 3.5% gain, and Yatin will be shedding more light on that. Eternal, ITC, HDFC Life, Tata Motors are some of the other movers. On the flip side, as I mentioned, Kotak Mahindra Bank, slew of downgrades for that stock, and the stock is the top Nifty loser. JSW Steel continues to see weakness after the Supreme Court decision that overturned or that scrapped the Bhushan Power resolution. That stock is down almost 2%. ONGC, SBI, Dr. Reddy's, Axis Bank, these were some of the other laggards. But since midcaps, were upbeat today, Yatin, lots of movers there as well, and results reactions mostly.
Absolutely, result reaction, and as you were mentioning, the mid-cap index was up nearly 1,000 points, and the small-cap index also gaining more than 1%, and probably the reason why, the advanced decline ratio was almost 3:1. Now, if you look at the gainers, RR Kabel, after a strong set of numbers, that stock was up 15%. Swiggy, the lock-in opens for the stock, but I think the kind of rally that we have seen in Zomato, which is now eternal, Swiggy is trying to catch up, because there is almost a 20-30% kind of a valuation gap between the two quick commerce companies. Motilal Oswal Financial Services, since you were mentioning 3 weeks of gains for the market, so brokerage stocks are again in focus. Adani stocks obviously were in focus because the Bloomberg report says that the Adani officials have met US administration for quashing the indictment charges which are there on the group as well as its promoters. So some positive news coming in from that front. But what was not doing well is Jindal Saw, K Fintech, Concord Bio. They got the US FDA Form 483 with 3-4 observations, so that stock saw profit taking, was down 4%. The stocks like Naveen Fluorine as well as Godfrey Phillip continue to make fresh 52-week highs.
Okay, lots of result reactions and news-based, movements across stocks. But let's talk about the earnings reactions, Yatin. In the thick of the earnings season, and I want to talk about the consumer names. Marico in particular came out with good set of numbers in terms of volume growth, especially, Yatin. Muted expectations of 5 to 6%. Although the expectations were high, you can say, because from HUL and the likes, the expectations were even low, and wherein HUL as well met expectations, and same happened with Marico. It has in fact beaten expectations. Expectations were of 5 to 6%, but the company reported a volume growth of 7%, and that's something that set the stock on fire. 4% up on a Marico. Otherwise a largely inline set of numbers. EBITDA margin in fact narrowed over 250 basis points to 16.8%. That was some bit of a disappointment, but the street wasn't really paying attention to that. The company is also expecting to sustain double-digit revenue growth going forward. It is aiming to deliver double-digit operating profit growth as well, and the annualized volume growth is likely to be over 5% in FY26. That's what the management has indicated. In fact, Shougata Gupta, who's been redesignated as or rechosen as MD and CEO of Marico, was on CNBC TV 18, and some insights in terms of demand as well. He spoke about that. He said there has been significant improvement in rural demand, and that is only expected to get better, right? With a good monsoon forecast, some of these rural facing companies are going to see tailwinds because of that, but urban demand is still patchy, and that will take some bit of time to pick up, I guess. But even there's some bit of tailwind because of the tax cuts, in fact, that was announced in the budget in terms of new tax regime. But the company is fairly confident that it will maintain volume growth of 6 to 7% in FY26. Food business is expected to grow somewhere around 25 to 30% in FY26. Digital is expected to grow higher. But the most important point, copra prices that had come down, the impact of that will be visible in the second quarter onwards. They were expecting it to flow in from the first quarter, but they will be visible from the second quarter, and it will of course reflect in the margin trajectory going forward. They are confident of double-digit operating profit growth, and Plix and Beardo, these two brands are expected to hit 1,000 crore rupees in FY26. Taking stock of what the street is really making of these numbers, you have brokerages maintaining their faith in the stock. In fact, they have upped their target prices as well. I just want to point out what Ambit has done. It has a buy rating. The target price has been increased marginally by 30 rupees to 766 rupees. But they are pretty confident that the company is going to maintain the revenue run rate that it has seen. But they've also pointed out that Parachute, their flagship brand, Parachute, has posted a 1% volume growth, but in terms of value growth, they have seen a 22% growth. Even Saffola edible oil growth improved to 26%, and value-added hair oils have turned positive at 1%. They've also gained market share both in Parachute as well as value-added hair oil. They are expecting FY26 growth to be somewhere around 11%. That's in double digits, and they're saying that scale up in the adjacency portfolio will be key to the long-term growth. Morgan Stanley equal weight rating target price is at 674 rupees, and of course they have said that Beardo is set to reach double-digit EBITDA margin going forward. Jefferies as well, they have maintained a buy rating. Target price has been raised to 800 rupees from 780 rupees earlier, and they are quite impressed with the 7% volume growth, the India volume growth, and they've also pointed out that the international business in terms of constant currency growth is also doing fairly well, although they have flagged off the fact that margins came under pressure due to some bit of compression in gross margin and higher ad and advertisement and promotional spends as well. But all in all, they say that the outlook is reasonably positive on both core as well as growth portfolios. So yes, I think consumption you can say that consumption has been a winner in the fourth quarter earnings season, given the fact that heavyweights like HUL have also managed to meet expectations in terms of volume growth, and mid-cap names like Marico have in fact topped expectations when it comes to volume growth, which is a key parameter by which you measure the performance of some of these FMCG companies.
Right, and Marico clearly today is one of the biggest winners. Now, talking about Mahindra and Mahindra, and they also came out with their full year earnings as well as Q4 earnings. The guidance was good. The overall earnings was much better than expectation. Now, if you look at Mahindra and Mahindra standalone numbers, which are basically consistent of the overall scheme of things, which is good margins on tractor segment, good margins on UV segment, X of the electric vehicle portfolio, clearly there was good market share gains for the tractor business as well, which was almost at the all-time high. Now, talking about the numbers, clearly Mahindra and Mahindra surprised the street positively with the margin performance, because, the overall margin performance was expected to remain flattish given the fact that there was some commodity headwind for the quarter. Now, if you look at Mahindra's standalone profit, that has seen a 20% growth. Consolidated profits also have seen a 20% kind of a jump, and the consolidated revenues and EBITDA has seen a very strong growth. In fact, the EBITDA on an absolute basis has risen by nearly 39%, with margins expanding by nearly 180 basis points on a year-on-year basis. Obviously, if you look at Mahindra Mahindra, they are expecting that in FY26 the SUV industry sales growth will be 5%, double-digit growth for their electric vehicle SUV segment. And most importantly, they will introduce a new platform in which they will be developing new variants in the coming quarters. That will be probably near 15th of August. So, the management guidance for FY26 looks good, especially to do with the fact that Maruti was slightly cautious on the industry growth, which was almost 1 to 2% only in volume numbers. But yes, since M&M has been a market leader in the SUV segment plus the electric vehicle portfolio, I think the growth there, volume growth combined basis should be more than 12% or so. That is what the analysts are penciling. Obviously, the analyst meet begins today. So, the notes will be ready by tomorrow. So, we'll get an idea as to what kind of upgrades in earnings do we see post the quarterly numbers from Mahindra and Mahindra.
That's true, Yatin, leader in the SUV market, SUV end of the business, and of course, tractor market share has also gained significant traction. But the stock has also sped, as in it has accelerated quite a bit. Yes. If you look at the last 1 month performance, stock is up 20% or so, although on a YTD basis, it's still in the negative.
Yeah, because of the Tesla issues, there was some panic selling.
Yeah.
But I think now probably it could inch up back to those highs if the management commentary release appreciated by the analyst community.
Sure, of course. That's one stock up 3.5% in today's session. Aside of that, the cables and wires stocks were, electrified today, so to say, thanks to strong or stellar numbers from RR Kabel. That stock was, I think, at one point up somewhere around 17-18% in intraday trade, but ended higher by about 13% or thereabouts. It was the biggest single-day jump for the stock since it listed on the bourses. Street, of course, has cheered the stellar performance in the fourth quarter. They've also taken note of the capacity expansion plans that the company has, and that becomes important given the fact that we are looking at the entry of another player in this particular segment, and that is that in fact gave rise to a lot of fears, competition fears, and we did see some of these stocks sell off quite a bit post that announcement. But with the capacity expansion plans, these players, existing players, are gearing up for the competition. That comes as a balm, for the street. But of course, the company reported highest ever revenue in the fourth quarter. The operating revenue grew almost 30%. EBITDA also surged somewhere around 70% on a YY basis. EBITDA margins for the quarter were up 200 basis points, on a year-on-year basis, and volumes also for FY25 grew in excess of 7%. Of course, the company announced capacity expansion at a time when competition is intensifying within the wires and cable segment. The company has, of course, said that it will be, adding 36,000 million tons capacity for the wires and cables unit at Gujarat, and the target completion will be by March 2028 in a phased manner, and this will come at an investment of 1,050 crore rupees, which will be funded by internal accruals as well as debt. For the Silvassa and Daman and Diu units, they have announced a 6,000 million ton capacity addition on top of the existing 12,000 million ton capacity addition. In fact, capacity that they have already initiated, and the new capacity is expected to be ready by December 2026, and that too in a phased manner. In fact, the management also shared Vision 2028 for the company, wherein they are expecting an 18% compounded annual growth rate for the wires and cables business. That's of course over 3 years, 1.8 times growth in exports, as well as 1.7 times increase in their overall capacity, and 25% compounded annual growth rate in the fast moving electric goods segment over the next 3 years. In fact, the management came on CNBC TV 18. They said that they are seeing good demand in the domestic and export markets. They are expecting double-digit margins 2 to 3 years down the line. they are expecting their FMEG business to break even in FY26 itself. In fact, they are aiming for 100 basis point improvement in cables and wires in FY26, and expansion across the facilities that they have announced will be in terms of the cables business. 18% volume growth, as I mentioned, that's what they are expecting over the next 3 years. They've also taken note of the fact that there will be new entrants in the cables and wires segment, and in fact, the management said that it is a good sign because there is enough scope for everyone to grow. But Street is a little cautious because there will be increased supply, and that will lead to more competition. So, that's why we saw a knee-jerk reaction when UltraTech announced its entry into this particular segment. But the point to note is that RR Kabel in particular, from their March lows, the stock is up almost 36%. So, all of those, losses that these stocks saw, most of them have recouped all of those losses. But one brokerage note I was reading on this particular company, Motilal Oswal, they have maintained their neutral rating, but they are open to changing their stance, on this company after its conference call. They've said that volatile copper prices may adversely impact near-term demand, and competition, of course, is one factor that they have mentioned in the medium to long term that could, weigh in on the company. But aside of that, mostly they are positive and they are waiting for the conference call details to come out so that they can take a call as to what they will do with the stock. But yes, numbers have been good, and we can see, in fact, the entire cables and wire segment was trading with smart gains today.
In fact, yes, you rightly mentioned that RR Kabel post the numbers, stock was up 15%, but stocks like Polycab as well as KEI Industries are clearly recovering in trade. In fact, all of these wire and cable businesses which were down because of the Birla entry and the Adani entry have seen a smart recovery from the lows. In fact, stocks like KEI, RR Kabel, or be it other stocks including Polycab, they have seen a 10 to 25% kind of move from the lows that they hit recently. So yes, good recovery in the entire sector, especially post RR Cable's numbers. Other stocks are also doing well in the sector.
So yes, a good day for us today. Good Monday. We started the week on a good note. Let's hope the momentum continues. And 24,500, we are just about around that level. Let's see whether 25,000 could be a target in the near term, maybe the next couple of weeks or so. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening. Thank you.